And let's begin the show then by a corporate conversation. Gateway Distriparks has reported a weak set of Q4 numbers. The company has posted a revenue growth of just 5%. The EBITDA was flat on a year-on-year basis. Both margins and profits have seen a decline in the fourth quarter. To discuss the outlook, the way forward, we are joined by Prem Kishan Gupta, the chairman and managing director of the company. Thank you very much, Mr. Gupta, for joining in. This is Rima here. In the press release, you've indicated that exports did go through some period of slowdown over the last 6 months, but April onwards, you are seeing signs of recovery, while import volumes continue to remain fairly healthy and grow. So could you give us an indication of how the month of April and May has been for the company? What are the kind of volumes and what's the outlook for the full year, FY24?
Good morning, Rima. Thanks for having me on the show. As far as our FY23 financials are concerned, if you leave aside Punjab Conveyor, in FY22 we had Punjab Conveyor, which we gave up after 15 years of agreement. The top line from there was 89 crores and the EBITDA was 15 crores. But at the PAT level, we were losing money. So that is why we did not go for any renewal. If you look at from that point of view, the revenue was higher by 10.5%. EBITDA was higher by 5%. And PAT, you have seen, it has seen a significant growth. As far as the exports, in the second half of the year, the exports went down by 16%, and that resulted in an imbalance of running the trains, which led to lower revenue and lower volumes. Otherwise, we could have had better margins and better revenue. But in April and May, we have seen early signs of recovery in the exports. And the visibility that we get from our customers and the shipping lines is that from June onwards, up to September, they have enough in the pipeline. So this imbalance, which is currently at 57 in favor of imports and 43% in exports, has slightly gone down in the first couple of months by 2%. But we expect full recovery going forward, in the month of June and next quarter.
Got that. But can you give us some guidance in terms of the volumes? What would the rail business volumes look like for perhaps the near term and the full year? And even the container freight station, the CFS business, what are the volumes that we're targeting? Considering that, exports are still just about picking up, what can we expect for the full year?
So this year will be the full year of Kashipur terminal, where we are doing well. And the normal growth that we expect when the exports come back, and as I said, imports are still on the rise. So we expect to gain volumes by 15 to 20% in this current year, which means by 24. And we have 31 trains now to carry the containers. We are adding 3 more rakes, trains this year. So a total of 34 rakes will be available, which will take care of the additional volumes that we expect during the course of this year. As far as CFS business is concerned, that will remain flat because there's very big competition at all the port towns. But we are maintaining our position, our market share. So we expect that to remain at the same level as in the last year.
So CFS flat and railway business volumes 15 to 20%.
Yes.
Okay.
And what is the market share, Mr. Gupta, where you operate right now? In the terminals that you currently operate in, what is the market share like?
See, in the NCR region, we are in the range of 16 to 16.5%, which we have maintained. But as I said, the exports have come down. So because of that, the pie has become smaller. And in Ludhiana market, our market share was 34%, which is now 32.5%. Because again, that market is very import heavy and the exports have gone down in the last year. So if the exports pick up, I think we will go back to our market share.
Also, what would the EBITDA look like considering that CFS is not going to contribute? There is no growth that you're anticipating for the CFS business. Will that put pressure on the EBITDA? How should we, visualize the company's margins and EBITDA going forward this year?
Well, margins, we still have good margins on the rail business, which is about 25-26%. And with a 15-20% growth, we expect to maintain that EBITDA margin. So I would say that the revenue will grow up in the same range, and imbalance will slightly increase our margins. So overall, it looks good in the current in FY24.
Okay, got that. We also want to know about the Kashipur infra integration. If you can just take us through what the impact for that has looked like. Because I think earlier you had mentioned that from Q4 you will earn the entire revenue for rail and terminal services from Kashipur. So can you tell us what kind of impact we will see on behalf of this integration?
Well, Q4 was a full 1 quarter where we had Kashipur terminal and our trains running exclusively. So we have done roughly about 9,000 TUs in that quarter. And starting this quarter, we are aiming at 4,000 TUs per containers per month. So we are very much there, in the month of May.
So what about your overall debt? Because your net debt to EBITDA increased post the completion of the Kashipur ICD, the Kashipur acquisition. So what's the outlook on debt going ahead? Any numbers you could share?
See, if you look at FY22, the net debt of the company was 268 crores, which has gone up to 340 crores in 23. But we have done 200 crores Capex mainly for Kashipur terminal to acquire that. And also that we have started construction. We acquired land in Jaipur and started construction over there where we have not borrowed money, and we are doing it from our own funds. Going forward, our policy will remain that if we are going for expansion and if we need funds, we'll borrow. Otherwise, we have in mind the debt reduction, and which we are doing it regularly, on quarter-to-quarter basis. And whenever the cash flows are good, we try to prepay our debt.
Do we expect debt reduction in FY24 because you had a Capex planned of 500 crore, of which only 200 crore has been spent on Kashipur and Jaipur. So you still have 300 crore of Capex which you've planned, and you are considering even M&A in that. So should we really expect your debt to come down, or do you think it's only going to rise from current levels of 340 crores?
No, I think it will remain at the same level because our cash accruals are good. So we'll be using our cash, and at the same time, whenever the opportunity comes, this 300 crores is for the next 2 years, FY24 and FY25. So our net debt will not go up, and we'll try to use our own cash flows as much as possible.
Okay. We'll leave it at that, Mr. Gupta. Thank you very much for joining in. That's Gateway Distriparks telling us that there has been some recovery in the export business. It was under pressure in the second half of last year. Volumes were significantly lower, but now there are green shoots emerging. For the railway business, 15 to 20% kind of growth. The CFS business, though, is likely to remain flat. They've got some Capex planned, about 300 crore to be spent over the next 2 years, though they are looking to maintain the debt at the same level. So they are planning to fund that Capex via internal accruals. We'll slip into a break. We'll come back and discuss commodities. Manisha Gupta joins us next.